right? So the company has approached you as a financial management expert to perform an analysis of the above project. So nataka mnisikize, it's November 2016. Haraka, it's November 2016. So in November 2016, nataka mnisikize, nataka nifanye shortcut. Nataka nikuwe na annual cash flows. So we have annual cash flows. Nataka tuandike annual cash flows 3 peke yake. Nataka niseme ni 1,000. Nataka niseme ni 1,500. Nataka niseme ni 2,000. Alafu niseme probabilities. Probabilities pia nataka niweke zile fake kidogo hapa. Nataka niseme ni 0.30. Nataka niseme ni 0.40. Alafu niseme ni 0.30. Hizi ni zangu tu just for our illustration here. Just for illustration here. The same case with the drug life. So the same case with the drug life. Drug life, I would want us to have like 3, 4, 5 with the following probabilities. So we have here 0.50, we have 0.10, and then 0.40. So it's my question. So when you are given, ladies and gentlemen, this kind of a question, and then they want you to carry out simulation analysis, what we should never forget, the first step should be for you to come and give us cumulative probabilities. Please give us cumulative probabilities. Hata ni swali yangu tu, usiwapeleke hapo, ni swali yangu tu. Cumulative probabilities, so please accumulate them downwards in simulation. This will be 0.30. Ukiongeza itakuwa 0.70. Ukiongeza itakuwa 1.what here somebody? 1.00. Remember, we must be very specific with what here? Decimal places. We must be very specific with decimal places. So kutoka hapo pia fanya the same kwa hii. Cumulative probability. Hapa tuko na 0.50, hapa tuko na 0.60, hapa tuko na 1.00 like that. Right? Now, ladies and gentlemen, come and give us random number ranges here. Random number ranges. Unaweza kuwa unakumbuka vile tunapata random number ranges? Unaweza kuwa unakumbuka vile tunapata random number ranges? I'm just guessing this question wapeleke haraka tutoke kwa hii. Random number ranges? Aha, wanakumbuka what random. Thank you very much. Kitu ambao wamesema, hii mwalimu ni ya 2 decimal places. Kama ni ya 2 decimal places, the range lazima zikuwe na 2 digits. Ianze 00, 2 digits namna hiyo. All the way to the upper limit. To get the upper limit, we normally take this number as if it's a whole number. So it will be 30 minus 1. So 30 minus 1 gives me 20. How do we get the upper limit? To get the upper limit, we take this number as if it's a whole number. Itakuwa 30. And then you subtract 1. Look at what I'll do in the next class. The next class, I'll take the next number after 29. Next number after 29 is 30. So 30 all the way to the upper limit. Upper limit here will be 70 minus 1. 70 minus 1 gives me 69. From there, we have 70. 70 all the way to 100 minus 1. 100 minus 1, which gives me what here? Somebody 99. 100 minus 1, which gives me 99. Right? So please go to the next one again here and give me the random number ranges. So random number ranges, what do we have here? Somebody, it's 2 decimal places. 2 decimal places in 00, all the way to 50 minus 1. 50 minus 1 gives me 40 what here? Somebody 49. Right? From there we have, ladies and gentlemen, the next class after 49 is 50. So 50 all the way to what here? Somebody 50 all the way to 60 minus 1, which is 59. From there, we have 60 all the way to 100 minus 1, which gives me what somebody there, which gives me 99 like that. Thank you very much. Now, from there, I'll come and do what we call a simulation worksheet. So simulation worksheet. Iko mwanafunzi hapa anaweza akatandika simulation worksheet haraka haraka. Simulation worksheet, what do we have there for simulation worksheet? So simulation worksheet, remember, you look at the variables that you have. You have 2 variables. You have the cash flow and you have the drug life. You don't know what cash flow will be. You don't know what the drug life will be. So in that case here, what we shall do, we shall estimate them. So to estimate them, I'll come and start here with run number. So we start here with run number. Kwa kila run, I would want to estimate them. So how do I estimate this? I estimate this, of course, it's guesswork. I don't know what cash flow will be. It is going to be a random thing. So I'll randomize it. So I'll come and pick a random number, and then I will be able to get, in this case here, my cash flow. So random number, and then I'll be able to get my cash flow. The next one, ladies and gentlemen, will be again random number. Random number in this case here, which will help me to pick the second one. The second one is a drug life. The second one is a drug life. The second one is a drug life. Right? So always you randomize your variables. There are two of them. So random number, you have a cash flow. Random number, you have what here? The second is drug life, like that. So mimi nataka tufanya runs mbili peke yake. Nataka tufanya runs mbili peke yake haraka sana. So runs mbili, random number ya kwanza kabisa ni ngapi? Random number ya kwanza kabisa ni ngapi? Random number ya kwanza kabisa ni ngapi? Random number. Please ukienda kwa hiyo 5397, isn't it? 5397. But now remember, how many digits do you have here? 222. So this 5397, lazima uipartition. Unaipartition into 22. Kwa hivyo itakuwa ni 50 what here? 53. Is that okay? Right? The next 97, you use it here. 97. So we are through with the first run. And then you go to the second run. Pick the next big random number. The next big random number ni ngapi? The next big random number ni ngapi? The next big random number ni 6699. So 6699 again requires partitioning. So we have here 66 for the first variable here, and then we have 99 for the second variable. Right? So could you kindly then pick this cash flow for us? Pick the cash flow for us. If the random number is going to be 53, where is 53 here? Kwa cash flow. Kwa cash flow, where is 53? 53 is here. Is encapsulated here. 53 is here, is well between there, within there. So it means that the cash flow will be what here? Someone will be 1500. Right? How about 97 in the drug life? 97 in the drug life, this is where 97 is. 97 will give me how many years? 5 years. Please do the same here for the second run. Please do the same for the second run. So the second run, the first one is 66. So 66 will give me what? Somebody in the cash flow. 66 in the cash flow. So 66 is again here. 66 is there, which gives me, unfortunately, sikutaka hivyo, 1500 is imekuja the same, which is very bad, but no problem. For revision, that's okay. So the next one is 99. So 99, what do we have there? 99, what do we have here? 99 gives me what? Somebody there. And then it gives me 5 years. So I would want for our revision, just for our revision here, for our revision, I would want to assume this is 1,000. For our revision, I would want us to assume this is 1,000. And then I would want us to assume that this, for instance, is 3 years for our revision, right? Is that okay? Is that okay? Is that okay for our revision? For our revision? Yes. Sasa nataka mnisaidie hapa. Kumbuka, kuna tofauti ya advanced management accounting na tofauti ya AFM simulation. Tofauti ni kwamba sisi katika AFM lazima tu discount. Lazima tu discount. So lazima kuja create column hapa ya PVFA. Create column hapa ya PVFA, present value, interest factor of an annuity. Is it supposed to be, are these cash flows annuity cash flows, or are they annuity cash flows, or independent, irregular? Are they annuity, or they're annuity, isn't it? They are per year. Doesn't it know annuity cash flow? Yani kuinterpret in 1500, it's an annual. It's 1500 for each year. For how many years? For 5 years. Remember, run number 1 is independent from run number 2. So don't tell me that, Mwalimu, I'm reading these figures downwards. Don't tell me that you're reading them downwards. They're very independent. So first of all, I'm supposed to get the NPV for run number 1. And run number 1, how am I interpreting this? I'm taking this 1500 year per what year per year for 5 years. So it means that here, I'll be able to read the PVFA 16% for 5 years. PVFA 16% for 5 years, then this one here will be PVFA 16% for how many years? 16% for how many years? 16% for how many years? How many years do we have here, somebody? How many years do we have here, somebody? 3 years. I just guessed like that. So where am I getting 16% from? 16% has been given to us. 16% has been given to us from, in this question, minimum required rate of return is 16%. So cost of capital is 16%. So please go to your PV for the annuity tables. So the annuity tables ya kwanza ni ngapi somebody? Annuity table ya kwanza ni ngapi? Annuity table ya kwanza 3.2743. So ya kwanza nitavuta hii, niseme ni 3.247, 3.27743. Thank you very much. How about the second one? Ya 3 years from your tables inakuwa ni 2.2459. 2.2459 like that. Thank you very much. Now, ladies and gentlemen, I would want you to go ahead and make now the discounts. Make the discounts, come and discount for us. Please give me what we call now the net present value. Give me the net present value. Please give me the net present value. So I'll take the cash flow here. I multiply with the PVFA. Whatever I get, I will subtract the initial outlay. Whatever I get, I'll subtract the initial outlay. So it'll allow me to bring my working here because of my space. So it is this 1,500 which needs discounting. So this 1,500 has to be multiplied with PVFA of 3.2743 minus the initial outlay, which is 13,000. Initial outlay, which is 13,000. Minus the initial outlay, which is 13,000. Remember, initial outlay has been given in this question as 13 million. But my figures here are in terms of thousands. So I have to write it very well, 13,000. 13,000, you subtract, or 30 million, you cut out the 3 zeros. You cut out the 3 zeros. You cut out the 3 zeros. So somebody wants us to remind them the formula of PVFA. Somebody wants us to remind them the formula of PVFA. Somebody wants us to remind them the formula of PVFA. Somebody wants us to remind them the formula of PVFA. So to get PVFA, remember, kuna hii PVF. PVF is 1 plus R raised to negative n. And then now we have PVFA. PVFA itakuwa ni 1 minus this. 1 minus 1 plus R raised to negative n. All over R, like that. All over R like that. Right? All over R. So nasema 1 minus this smaller formula all over R. Kwa hivyo ukitaka, for example, kama hii ya pili, PVFA 16%, 3 years, itakuwa ni 1 minus 1.16. Nimetoa 1.16 wapi? Nimetoa 1.16 because R is 16%. So 1 plus 0.16 itakuwa 1.16. Then this one here will be raised to negative n. How many years are we talking about? 3 years. 3 years. 3 years. All over R again, which is 0.16. Lakini uko na table ya hii, So tanda pole seme 1 minus, somebody help me out, because I saw somebody saying that this figure is wrong. This figure is wrong. So enda sema 1 minus 1.16 raised to minus 3 equals whatever you get, you say divided by 0.16. What are we getting there, somebody? 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 Right? What are we getting, somebody here? Very fast. What are we getting very fast? 2.2459. 2.2459. 2.2459. 2.2459. Some students are stranded in the old AFM group. Pole. Aya, hebu nipatie figa jamani, nipatie figa ya kwanza. NPV ya kwanza inakuja ngapi? 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 So NPV ya kwanza, sorry. NPV ya kwanza inakuja 2. No. NPV ya kwanza inakuja ngapi? NPV ya kwanza inakuja ngapi? NPV ya kwanza inakuja ngapi? Aki hawaniongeleshi. NPV ya kwanza inakuja ngapi? Sasa hapo huwezi anza kuwatafuta mmoja. Everybody now gets the benefit. After all, all of them are my students. So unasema ya kwanza inakuja 2244.88. 2244.88. How about the second one? How about the second one? Inakuja negative 80, negative 80. Second one. The second one inakuja ngapi? If you take this cash flow times that NPV, right? Minus the initial outlay is 13,000. That remains. The initial outlay, it's minus 80, sorry. The first one I'm being told is minus 80. The first one I'm being told is minus 80. Okay. Negative 80, 88.55. 88.55. How about the second one? 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 Remember, it's supposed to be high level, high level. So I hope you guys have been able to pick something there, however small. I hope you guys have been able to pick something there, however small. I hope you guys have been able to pick something there, however small. I hope you guys have been able to pick something there, however small. Right? I hope you guys have been able to pick something there, however small. It's a simulation question. It's a simulation question. So long as we pick a kitu, that is really what we wanted. Katika simulation, so long as we pick a kitu kidogo tu. So long as we pick a kitu kidogo tu. Pole kwa wanafunzi ambao tumekosea kidogo. Right. Usikuwe na hasira, maisha yataki kuwa na hasira. Always thank God for whatever reason. For whatever reason, always thank God. Usianze kukasirika asubuhi. Thank God for whatever reason. Thank God for whatever reason, perhaps whatever we have done. Hata itakuja kwa exam. Thank God for whatever reason. Mtu asikae kuambia tunakasirika. Never. Mimi siwezi kasirika in my life. Na kasirika kidogo sana. After all, you're not alone. You can see I was with the 8 students around here. Yeah. Usikasirike. So ukasirika here asubuhi na kuna paper saa 3. If I were you, I would really smile most of the time. Smile most of the time. Unasema hata amefunza, hata itakuja. Now, what are the key limitations of utility analysis? Utility analysis. Is there anybody who can give me? First of all, when you talk of utility, this is a measure of what here? Satisfaction. It's a measure of satisfaction. So what are the key disadvantages of this utility analysis? What are the key advantages? What are the disadvantages of utility analysis? Key disadvantages of utility analysis. Are you able to remember them? Utility. Relativism. So relativism inamaanisha, unajua kama natumia utility, it's only valid at one point of time. Ladies and gentlemen, kama natumia utility to be able to appraise, right? Whether this project will be accepted by some individuals. Kuna individuals, of course, we can never have the same satisfaction levels. Iko mwanafunzi hapo ukimnunulia gari, ataruka all the way to heaven. Iko watu hapa kama mimi, hata nikiwa na gari, for example, at times I would prefer even a matatu. I mean, you are being driven around, right? So utility value, in this case here, thank you very much. In this case here, they keep on changing changes between people here. In this case, ladies and gentlemen, number 2, a quantification. It is, utility is a qualitative factor, basically, right? It's very hard to quantify. So hard to quantify. Number three. So hard to quantify. Yeah, you're right, Kim Tai. It's not easy for you to measure. Again, this utility analysis. I'm letting points mzuri leo. This utility analysis Utility analysis. Utility analysis. Already point mzuri. Utility analysis. Difficult to specify, that comes here. Very difficult to specify. That comes there, utility analysis. Difficult in this case here, ladies and gentlemen. Difficult in this case here will be coming what here? Straight away, this difficult in terms of quantification, it will be coming here. So at the end of the day, ladies and gentlemen, when we talk about utility analysis, the key things you're supposed to remember here is that it keeps on doing what here? Changes. And in most cases, it basically it is a non-measurable value. And then of course, remember the concept of what here? Subjectivity, not objective. It's not an objective model. Not an objective model. So that is very important. Ladies and gentlemen, from there, I would want to take 1 minute, just 1 minute, to remind you, I'm so sure you guys are not thinking of this, to remind you, this normal sensitivity analysis, just 1 minute. It's a high level. 1 minute sensitivity analysis, are we there? 1 minute sensitivity analysis. 1 minute sensitivity analysis. And I would want us to do this November 2015 question 1B, the normal. November 2015 question number 1B. November 2015 question number 1B. Tell me, ladies and gentlemen, whether we are there. November 2015 question number 1B. November 2015 question number 1B. Are we there? Just a simple question. A company is considering whether to purchase equipment to increase its production and the sales volumes. The equipment costs 500 million and has a useful life of 3 years, after which it can be sold as scrap for 80 million. For each of the 3 years of usage, the equipment is expected to increase both sales revenue and operating costs by 600 million and 390 million respectively. The company's cost of capital is 10%. Compute the percentage change required in each of the following factors for the project to be rejected. So in this case here, what can make this project to flip to rejection area? How sensitive is this project? So the first thing that I'll do in this question is to calculate depreciation. The first thing that I'll do in this question is to calculate depreciation. Is that okay? Is that okay? Is that okay? Should I calculate depreciation? Should I calculate depreciation? No. We only calculate depreciation in questions with tax. No tax. So don't calculate depreciation at all. So here in this question, ladies and gentlemen, what I should do is to calculate what here in this question of sensitivity analysis. Once I've discovered it's a sensitivity analysis question, I'll get net present value first. So please go ahead and give us net present value, assuming no changes. Assuming no changes, give us net present value. So assuming no changes, give us net present value. So for you to be able to give us net present value, what you'll do is to come and give us cash flow. Hapa nimeona cash flow per annum. So the first thing they've told me is that my revenue will be increasing by 600,000. 600, my figures are in millions. Revenue will increase by 600, but again, the expenses are as well increasing. So in this case here, the net benefit is my cash flow. Because hakuna tax, the profit that I get basically is my what here, the profit that I get basically is my cash flow. Because they have told me the revenue and operating costs are 600 and 390 respectively. So 600 minus 390, that gives me what figure, somebody? Somebody, this will give me what figure, somebody? I want to say hapa ni 210. So this 210, it's a per annum figure. Kuna mara mention pale, wamesema each year. Wamesema the equipment is expected to increase both sales, revenue, and operating cost 600. Goja. Kuna mara wamesema for each year, beginning of that sentence. Wamesema for each year of the 3 years, etc. So this is supposed to be 210 per annum. Thank you very much. So, ladies and gentlemen, for me to be able to get this net present value, this net present value, I will take this cash flow of 210 per annum. It's per annum, so it must be multiplied with the PVFA, present value interest factor, of an annuity. What is the cost of capital given there? The cost of capital given here is 10%. How many years are we going to enjoy this 210? How many years am I going to enjoy the 210? 3 years. Apart from this operational cash flow, do we have any other cash flow that is ahead of us? Apart from this operational cash flow, do we have any other cash flow? Yeah, the scrap, which very many students forget. The scrap, which many students forget. The scrap, in this question, they have given us a scrap of how much? 80, thank you very much. So this 80 is a future cash flow. So this future cash flow has to be discounted. It's only one of figure. So then it can't be multiplied with the PVF, it will be multiplied by PVF. It will be multiplied by PVF because it's a one-off cash flow. I'll get to this at the end of the project. So PVF, the 10% remains 3 years. Now, from ladies and gentlemen, I've been able to take care of the operational cash flow. I've been able to take care of the terminal cash flow. Then we have the initial outlay. So come and subtract the initial outlay. Are you able to see the initial outlay in this question? Are you able to see the initial outlay in this question? Initial outlay in this question, amesoma ni ngapi? Somebody November 2015, 500. Initial outlay ni 500. Sasa hapa 10% iko kwa table yangu, remember. 10% iko kwa table yangu, remember. Kama hakuna naweza calculate haraka sana. Lakini najua kwa table yangu, kwa hivyo itakuwa 210 times PVFA ya 10% 3 years ni ngapi? PVFA 10% 3 years ni ngapi? Somebody. 10% 3 years ni ngapi? Naambiwa ni 2.4869. 2.4869 plus 80 times PVF. PVF inakuja ngapi? PVF inakuja ngapi? 0.7513. 0.7513, 0.7513 minus 500, minus 500, minus 500, minus 500, minus 500. I hope everybody is able to see where I'm getting these figures from. I hope everybody is able to see where I'm getting those figures from. I hope everybody is able to see where I'm getting those figures from. So then what is the final net present value? What is the final net present value? What is the final net present value? Wanasema ni 82.3441. 82.3441. Ladies and gentlemen, what we have here is a positive net present value. Even if I've not been asked, what I'll do when it's positive, I'll come and write what there, somebody variable. I'll come and write variable there. Ladies and gentlemen, once I reach there, now I will be able to remember that this examiner wanted me to carry a sensitivity analysis. So then I'll remember very fast that sensitivity analysis, we normally carry out sensitivity analysis for one item at a time. For one item at a time. So in this case here, come and do the first one, which is sensitivity analysis, sensitivity analysis, sensitivity analysis, sensitivity analysis of initial cost. Nana kuwa nakumbuka formula. Nana kuwa nakumbuka formula, the percentage changes. So Nana amesema kitu ya maana sana, sensitivity analysis ni sawa na percentage change. Nana kuwa nakumbuka formula hapa. Formula itakuwa namna gani? Formula. Nana kuwa nakumbuka formula ya percentage change. Percentage change. Nana kuwa nakumbuka formula ya percentage change. Thank you very much. So ladies and gentlemen, percentage change. Right. So in this case here, I'll come and take here my percentage change will be my net present value. And then you divide by the present value of the variable. And the variable really here is initial cost. So present value of initial cost or initial outlay times 100, like that. So the variable that you are looking sensitivity analysis of goes to the denominator. So itakuwa net present value all over the present value of initial cost, all over the present value of initial cost or initial outlay, one and the same. So uzuri, ladies and gentlemen, net present value already tuko nayo ni 82.3441 all over present value of initial cost. Initial cost present value ambao ni ngapi? Ni 500. Am I going to discount this initial cost? Initial cost is incurred today. Initial cost can never be discounted unless you're told this initial cost will be incurred at the end of year one. This can never be discounted. Times 100, times 100, which will end up giving us what figure? 16.47. 16.47, thank you very much. 16.47, thank you very much, percent. 16.47%. So up to there, are we together? Are we together? Up to there, are we together? Are we together? Are we together? Thank you very much. So could we kindly go to the second one? Second part is which one? Second part is which one? The scrap value of the equipment. 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 Could you kindly try that? Could you kindly try that? And I hope wale wanafunzi walikuwa wamekasirika kidogo wamepata kunisamea. Sio kupenda kwangu, being able to balance these things. I'm here. Kuna phone pale, right? We shall overcome. And the worst of it all is that I'm a man. You know, for a man to multitask. You know, initially, kawaida, we normally have what here? Kawaida, we normally have like 2 people who are managing this. Lakini pia nyinyi makosa mlifanya, tulisema wale ambao hawako kwa ile group waandike message. Wanaandika message ile waambia kwa WhatsApp. Watu walipata link mapema sana hao kwanza. Walipata link. Thank you very much. Lakini tuache story, tusikasirike maisha. Hii maisha iko na disappointment mingi. Kuna disappointment mingi. Unafurahi tu hata kitu kifanyika namna hii. Unafurahi tu. Maisha iko na disappointment mingi sana. Aya. Sasa hii ni sensitivity analysis South Africa of which variable? Sensitivity analysis of scrap value. Sensitivity analysis of scrap value. Scrap value. Scrap value. Scrap value. Scrap value. So the first thing that I will do is to come and provide the present value of scrap value. Remember, this scrap value will be incurred, or rather will be earned on the 3rd year. So meaning that I'll come and take the 80, I multiply it with the PV if it's just a one-off figure. PV 10%, 3rd year. Kwa hivyo itakuwa ni 80 multiplied by, hii figure nilivuta yangu bahati mbaya sana. 80 multiplied by what amount? 80 multiplied by what amount? 80 multiplied by 0.75, 0.7513. Aya, nipatie figure itakuja kuwe ngapi somebody? Nipatie figure itakuja kuwe ngapi? Hii ukimultiply inakuja ngapi somebody? 60.104. 60.104. Thank you very much. Meaning that my percentage change, which is a sensitivity analysis metric, will be equal to the NPV over the present value of scrap. Present value of scrap. So net present value, you guys had given me a net present value which was 8. Ilikuwa ngapi net present value? Ilikuwa ngapi net present value? Ilikuwa ngapi net present value? Net present value ilikuwa ngapi net present value? Aki hata waniongelesha sana. Net present value ilikuwa ni 82.what? 82.3, 82.3, 82.35. Divide this by 60.104 times 100. Ambayo itakuja kuwe ngapi? Ambayo itakuja kuwe ngapi? Ambayo itakuja kuwe ngapi? Ambayo itakuja kuwe ngapi? %. Thank you very much. So have you gotten some idea? Have you gotten some idea of how we do this sensitivity analysis? Have you gotten some idea? Yeah, hata sitaki upate mark yote, just an idea, high level idea. High level idea. High level idea. Thank you very much. So what are the key advantages of sensitivity analysis? Key advantages of sensitivity analysis. What are the key advantages of sensitivity analysis? Advantages. Advantages. What are the key advantages of sensitivity analysis? What are the key advantages of sensitivity analysis? Investment appraisal. Key advantage ni kama gani? Yeah, it's a risk analysis tool. It is a risk analysis tool. Very important tool. Nakwambia how sensitive is your project. to changes in the variables. That is very, very important. Ladies and gentlemen, number 2, it helps in identification of what here? Helps in identification of critical variables. Critical variables. You'll be able to know between the variables that I have, which one here is the most what here, which one is the most sensitive, which is the most sensitive one, and then I'll be able to take care of what here, care of it more than others. Ladies and gentlemen, it also enables what here? It enables what we call management by exception. What we call management by what here? Exception. Enables management by exception. So you're able to isolate, quite critical, or quite similar to the critical one. You're able to isolate variables. Yeah. So in this case here, number 4, we have the concept of, yeah, it's very useful in decision making, You'll be able to know that there are 3 variables. What do? Do we make, in this case here, a decision to go ahead and invest? Yeah, concentration on most sensitive areas, which is what your management by exception. Yeah, thank you very much. Now from there is one decision tree that I would want, only one decision tree that I would want us to do. One decision tree that I would want us to do. Which decision tree is this? Only one for our class here. Maybe hata haiko. One decision tree that I would want us to do. Kama hakuna tunaachana naye. Only one decision tree that I would want us to do here. Only one, yes. Year May 2018. May 2018. Just one decision tree that I would want us to do here. Mera banataka tufanye ngumu. Saizi hakuna. Unafanya ile mwalimu anakupatia. Ile mwalimu anakupatia, ile unafanya nayo. May 2018, question number 1, boy. High level, right? So C, Tabby Limited, are we there? C, Tabby Limited, are we there? Tabby Limited. The C, Tabby Limited has a potential investment opportunity for which the initial cash outlay and the future cash flows are uncertain. The analysis carried out provided the following probability estimates. So I can see cash outlay, I can see annual cash flows. Wanasema the cost of capital is 10%, life of the project is 10 years, the salvage value is 0. I love this question. It's a net present value question and it doesn't have tax. When a net present value question doesn't have tax, it's so good to me. Why? Because I'll not calculate any depreciation. So they want me to construct a tree for the investment to show payoffs, probabilities, and net present value for each alternative. This is very easy. So tunaanza namna hii. So the addition tree nitapata mark yote hata bila kujua nafanya. The first thing there is that I do not know what the initial cash flow will be. So I'm going to project them like this. I don't know what the initial cash flow will be. So I would want to make a decision as to whether, ladies and gentlemen, I'm going to incur 250, right? We have 280, 300, or 305, like that. Now, regardless of the initial cash outlay that I will incur, I do not know what the future cash flow, what my future benefit will be. If I incur an initial cash flow of 250, for benefits, there are 3 possibilities. So 3 possibilities. There are 3 possibilities. Sorry, we'll have to change something small here, but on layer 2, there are 3 possibilities. So the 3 possibilities are here. It doesn't matter how much you inject into the project. There are 3 possibilities. There are 3 possibilities here. There are 3 possibilities there. So the 3 possibilities are which ones? For example, we have here the benefit. The first benefit there could be 45. The second benefit there is 50. The third benefit there is 60. So 45, 50, 60, 45, 50, 60. Hapa tuko na 45, 50, then we have got 60 like that. Right? Well, do I want to make a change? I want to make a change a little bit. Why? Because this is supposed to be a circle. Why is it supposed to be a circle? Because these figures are probabilistic. Quite unusual. Initial outlay is never probabilistic. This is the first question. Non probability, right? So if they are probabilistic, they are slippery. Slippery, yes. So in this case, ladies and gentlemen, 250, I can see the probability is 0.4. 280, the probability is 0.25. 300, the probability is 0.25. 305, the probability is 0.1. 0.1. So are we together, first of all, up to there? Are we together? Are we together up to there? Right? Right? It's only bit amesema tuko together. Au wengine wamesema mwalimu tuko together kama Jubilee. Yani president na deputy president ama kama NASA. Yani watu tofauti. Watu wako kimbali sana. So thank you very much. The other figures also are probabilistic. That's why I'm capturing them from what? From a circle. So the probabilities are 0.2, 0.4, and 0.4. So hapa tuko na 0.2, 0.4, and then 0.4. 0.2, 0.4, and then 0.4, 0.2, 0.4, 0.4, 0.2, 0.4, 0.4 like that. Ukitaka hapo unaweza kuja ukasema unataka ku make a decision ya invest or don't invest, wachana naye. Tuende namna hiyo. Tuende namna hiyo. Tuende namna hiyo. So ladies and gentlemen, I would want you to do me a favor. I would want you to do me a favor. Ukija hapa wamekuambia this cash outlay. The cash outlay will be incurred in which year? The cash outlay will be incurred in which year? The cash outlay will be incurred in which year? The cash outlay will be incurred in which year? The cash outlay, the initial cash from the name. Year 10, no kiriaini. No. Initial cash outlay, unless you're told otherwise, that is normally incurred today. So initial cash outlay, no discounting. No discounting. No discounting. How about in this case here, this annuity cash flow? The annuity cash flow, like this 45, I'm going to earn it every year. For how many years? For 10 years. For 10 years. And they've told you it's an annual cash flow. So in this case here, these ones here must be discounted. So meaning that I will need PVFA. Have they given me the cost of capital? Use PVFA. I like what Mary is telling me. Right. 10%. 10%. How many years? 10 years. So could you kindly read for us this? Kindly read for us this. A good student namuuliza, mwalimu, remember that thing of saying, like this, right? Invest, don't invest. You want to make it very complete. Invest, don't invest. So if I invest, there are 3 investment options, like or rather 4, like that, right? So ananiambia kwamba inafaa kuwa 6.1446, like that. Aya. So kama tuko pamoja, tuanze na node number 1. This is node 2, node 3, node 4, node 5, node 6, node 7, node 8, node 9. Mimi sitafanya zote. Tufanye chache. So tuanze na node 1. So node 1, what is happening? Remember, first of all, for each branch, you're going to get net present value without taking cognizance of what your probability. So you ignore probability. So for node number 1, I'm going to get 45. 45 is my cash flow. And I'll be getting this every year. So times PVFA, which is 6.1446, minus the initial. Remember, this is an initial cash flow. These ones are supposed to actually to be what here negative, like that. The initial cash flows. So minus what here, somebody you're following this branch number 1 all the way to heaven, like that. So it'll be 45 times the PVFA minus the initial outlay, which is 250, like that. So could you kindly give me a figure there? Kindly give me a figure up there. 26.5. Thank you very much. So you ignore probabilities totally. First. So how about branch number 2? Branch number 2, are you able to see the cash flows on branch 2? Unaifuata paka Matwine, branch 2, I'm able to see like my road. I'm driving here, my road, I'm driving my road. So I can see the first cash flow I'll be getting here is 50. So I have 50 times PVFA will not change. PVFA will not change. So 50 times 6.1446 minus the initial outlay, which is 250. Like that. What figures are we getting there, somebody? What? 57.23. 57.23. 57.23. Ladies and gentlemen, from there we go to this branch number 3. So branch number 3, we have 60 times 6.1446 minus, again, you can see my road, 250 is applicable. So minus 250. So what figures do we have here? What figures do we have here, somebody? What figures do we have here, somebody? What figures do we have here, somebody? 118.68. 118.68. Thank you very much. Ladies and gentlemen, let's go to branch number 4, and I'm going to stop there. Let's go to branch number 4. Branch number 4, are you able to see the cash flows we expect? Branch number 4, the cash flows we expect here, we have 45. So 45 times the PV for 16.1446, like that. This time around, you can see we have changed the road a little bit. So minus what here, somebody? Minus 280. Minus 280, like that. Minus 280, like that. So that will give me what? Net present value. 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 That will give me minus 3 point, like that. So blah, blah, blah. Paka umalize yote sasa. Umalize yote. Usimalize hata leo, achana nayo. Wewe kitu ya maana hapa, ni ushike paka hapo, alafu kuja ushike kitu kingine. Kwa mfano, umeniambia ati hii ni 26.5. Umeniambia ati ni 26.5. Umeniambia ni 57.23. Umeniambia ni 118.68, like that. So ladies and gentlemen, I don't want to continue with the others. Of course, I have all the others. So then the next step will be for us to come and give them the joint probability or joint probability. So joint probability, what do I have? For branch number 1, is there somebody who can see the joint probability? Yeah. So for branch number 1, unafuata branch yako paka Matwine. Unaona? Unaangalia probabilities which are on your branch, and then you join them, you multiply them. Yeah, 0.4 times 0.2. Unaona hapa, you multiply them. So kwa hivyo inamaanisha kwamba branch 1, the joined probability is 0.08. 0.08. Right? Ukija kwa branch 2, what do we have? Branch 2, are you able to see the probability to be joined there? 0.4 times 0.4. 0.16. 0.16, like that. How about branch number 3? Branch number 3, you simply go to the entire branch, the entire road. Any probabilities you get there, you multiply them. Even if they are 10, even if they are 3, you multiply them. So again, 0.16. So after that, ladies and gentlemen, what I'm going to do is to come and create a column of XP. You create a column of XP. So column of XP, of course, you multiply, right? You take the values times what are their corresponding probabilities. You take the values times their corresponding alafu unakuja una add hapa chini kabisa. Una add chini kabisa. Ladies and gentlemen, it's a high level. Have I done some justice to this question? Have I done some justice to this question? Have I done some justice to this question? It's a high level, remember. It's a high level, remember. It's a high level, remember. Thank you very much. Thank you very much. So I want to believe up at least, hawezi ukatoka bure, hawezi ukatoka bure. Hawezi ukatoka bure. Hawezi ukatoka bure. So ukishapata hizi XP multiply, utakuja uadd, you add. Ikiwa positive, finally umepata positive, unasema invest. You make a decision, unasema namna gani, somebody invest. Unasema sasa invest. Unasema invest. The last step utakuja hapo useme invest. Okay. Very good. Very good. Very good. Very good. Hizi vitu ndogo ndogo nimerudia sana hizi. Hata ukileta hizi leo utakuwa na furaha sana. Hivi vitu ya bootstrapping, management buyout. Hiyo si mnajua sana. Bootstrapping, management buyout. Hizo mnajua sana. Hizo tumerudia sana. Tumerudia sana. Tumerudia sana. Tumerudia sana. Aya. Tuangalie vizuri. Again, high level. May 2016 question 4B. High level. I know we have done that question in class. I know we have done that question in class. May 2016 question number 4, high level. So please, I would really beg that you try to catch up with the speed here. Try to catch up with the speed. Try to catch up with 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 speed. Okay, we shall be able to do high level ya hiyo. Hii question ya huge limited intends to acquire tiny limited. Tuko nayo question. Huge limited intends to acquire tiny limited. Another company in the same industry. Tiny limited is expected to post earnings of 86 million next year. If huge limited acquires tiny limited, the expected results of tiny limited for the next 3 years will be as follows. So we have year 1, year 2, year 3. From year 4 onwards, it is expected that the annual cash flows from tiny limited will increase by 4% each year into perpetuity. Your concept of perpetuity, examiner naipenda, not ipata. Perpetuity. Tax is payable at the rate of 30%. Tax is payable at the rate of 30%, and this tax is paid in the same year the profits to which it relates are earned. Right? If huge limited acquires tiny limited, it estimates that the gearing after acquisition will be 35%. Measured as a value of debt as a proportion of total equity and debt. So this gearing, ukisikia gearing, what comes to your mind? Somebody talk to me. Ukisikia gearing, of course, debt, isn't it? So they give you gearing percentage. Basically, they are giving you weight of who? They're giving you weight of debt. So they're telling you that the weight of debt is 0.35. Ukisikia weight of debt, of course, a good student will tell you, once I know the weight of debt is 0.35, then I know that the weight of equity will be 0.65. Because the two must add up to what here somebody. Thank you very much, Winnie. WACC will apply. WACC will apply. So, ladies and gentlemen, WACC, iko mwanafunzi ajui kupronounce kitu kiprof. Unasikia mwanafunzi amesema ati wakaka. Sasa wakaka yule professional kweli. This is WACC. So WACC we have Wekesa. Unajua jana leo mwanafunzi anasema representation from Kakamega. The advanced financial management inapenda Waluya sana. Iko na Wekesa, iko na ugali ya Mluya. So weight of equity, cost of equity, then we have weight of debt, cost of debt. Cost of debt has to be after taxation. So this cost of debt, remember always to deduct what your tax, right? Cost of debt after tax, I like that. KDA, I like that. Yeah, so weights tuko nazo, unajua cost of debt pia tuko nayo. Cost of equity, a good examiner will test you whether you can get cost of equity using CAPM. Amekuambia hapo chini, ukisikia language, the risk-free rate is 6% and the return on market portfolio is 11%. Are you able to see that language? So ukiona that language like that, they want you to get cost of equity using a CAPM. They want you to get cost of equity using CAPM. So cost of equity using CAPM, kama mimi najua kudraw attention ya examiner wangu, nitaandika kitu kama hii, nimwekea star, ni underline. Kwanza ikiwezekana hiyo ndio the only question ambayo unajua kufanya. Draw attention ya examiner. Right? So unakuja unamwandikia hapa cost of equity CAPM. Cost of equity CAPM itakuwa ni risk free plus ERM. Hapa anakuambia hata handwriting, unajaribu sana kutengeneza handwriting. Multiplied by beta equity. Right? Are we together up to there? Are you able to cope up with the speed? Are you able to cope up with the speed? Ama nimekimbia zaidi. Are we able to cope up with the speed? Thank you very much. Great. Thank you very much. So have they given me the risk-free? Have they given me the risk-free rate of return? Chonjo, thank you very much. Have they given me helicopter? Yes. Have they given me the risk-free rate of return? 0.06. So it is 6 like that. Plus, if it's CAPM, of course, these portfolio things, we always, in this case here, disregard who? We always disregard the percentages. So have they given me expected returns of the market? Expected returns of the market, wamesema pale chini, risk-free is 6% and the return on the market portfolio is 11. So 11 minus what here, somebody 6, multiply this with beta equity. Have they given me beta equity? Wamenipatia just a beta of 1.6. And this is a very useless examiner. A good examiner will always ask you to get beta equity using Hamada. How could you forget this? A good examiner cannot just give you beta equity like that. Why should I give you beta equity directly like that? Am I your mother? Am I your mother? Right? So cost of equity will be equal to what here, somebody? Cost of, hapa wanafunzi hapa watakosea sababu gani, somebody? Sababu ya bracket. Naona hapo utafanya body mass. 11 minus 6, whatever you get, times 1.6, times 1.6 plus 6, which will end up, in this case here, 14, which will end up giving me 14%. 14%. Thank you very much. 14%. 14%. Aya, sasa hebu pateni sasa WACC. Iko mimi ananiambia hapo, mwalimu, you are not my mother. You know I'm using those bad jokes. Ndio kumbuke hiyo kitu ya mother. I'm not a bad man. I'm the best man you can ever find. Best man you can ever find. WACC, are you able to see the weight of equity? Weight of equity hapa ni 0.65 times cost of equity. Simepata cost of equity? Yes. 14%. Yes. 14%. Plus weight of debt. Weight of debt uko nayo 0.35. Has the examiner given me the cost of debt? KD. Has the examiner given us the cost of debt? Has the examiner given us the cost of debt? Cost of debt, amesema ni ngapi cost of debt? It is 7.4. It is 7.4%. So it is 7.4% times 0.7. I hope tax is 30%. I'm making a bad assumption as well. Have they given me tax? Ama hakuna tax? Kuna mwalimu ametupatia tax kule ama hakuna tax? Tax is 30%. I can see it up there. It's there. Aya, abracadabra, oye, nipateni WS. Hii ni max inaingia tu. David wamebaki nyuma. Ni May 2016. May 2016, David amebaki nyuma. May 2016. Aya, abracadabra inakuja ngapi? Wanasema WACC ni 11. 10.91, 11%. Thank you very much. So 11%. Thank you very much. I'm so sure everybody would have gotten this correctly. Hapa hakuna mwanafunzi angeanguka hiyo hata mmoja. Sasa ladies and gentlemen, from there, nakuja nasoma the question itself. Required, they want us to give them, number one, the offer price for Tiny Limited, if Huge Limited were to value Tiny Limited on a forward price earnings multiple. So they want us to use PE ratio to value a firm. PE ratio to value a firm. These are those good examiners who are wishing us success. So they want us to use PE ratio to value a firm. PE ratio to value a firm. So is there someone who remembers the PE ratio formula? PE ratio equals who over who? PE ratio equals who over who? Somebody has forgotten this formula. No problem, you'll remember it. PE ratio equals who over who? It's MPS over EPS. It is MPS over EPS. And really what do they want us to do? They want us to value. To value is about getting MPS. So could you kindly give us MPS? Make MPS the subject of the formula. So if you make MPS the subject of the formula, then this will be PE ratio times EPS. If you make it the subject, because value over share. But you see here, they want total value, so no problem. So they want total value of the firm. It will be the PE ratio times total earnings. When it is total value, it will be times total earnings like that. Aya, abracadabra, has this examiner given us PE ratio? Langata shapatata answer. Has this examiner given us the PE ratio to use? Amesema something like what here? 8 times. Abracadabra, amesema something like 8 times. Is that okay? Amesema something like 8 times. Aki awaniongeleshi sijui kwa nini. PE ratio, amesema how many times? 8 times, yes. How about total earnings of the firm that is to be valued? Total earnings of the firm. When you go to any 86, total earnings of the firm have been given up there. When you go to valuation of any firm, total earnings is very important, times 86 million. It's been given up there. It's been given up there, times 86 like that. So ukimultiply itakuja ngapi? Somebody ukimultiply huo year inakuja 600 what year? 600 and what year? Somebody 688. That's number 1. Thank you very much. Thank you very much. Thank you very much. Number 1 is over. And then you go to Roman 2. Roman 2, they want us to give them WACC. So Roman 2, they want us to give them WACC. Remember, we have done this WACC up there. So what I'll do is to go to that place where I have my working. I label that, I number that very well, and make sure that I draw the attention of the examiner. So I'll relabel it number 2 and then write WACC, examiner kuja kuona, right? Right? And then on number 3, they want us to give them the offer price for Tiny Limited, using a discounted cash flow based valuation. Very easy. Very easy. Nana anauliza ametoa 86. Huko juu kabisa Nana wana macho yote lakini hawaoni. First paragraph, Huge Limited intends to take over Tiny Limited, another company in the same industry. Tiny Limited is expected to post 86 million. Is that okay? 86 million. Is expected to post 86 million. That's why they are calling it a forward PE ratio method. Forward PE ratio method. You're using a forward figure. Great. Sijui kama mmeelewa mpaka hapa. Tumeelewa mpaka hapa kweli? Tumeelewa mpaka hapa. David, tumekuambia mara mingi sana. It's May 2016 question 4B. May 2016 question number 4B. David, andika chini your question. Andika chini. May 2016 question number 4B. Question number 4B. Hata ikiwezekana mnawasaidia, mnatume question wapi? Kwa WhatsApp group. Mnatume question kwa WhatsApp group. Mnatume question kwa WhatsApp group. Thank you very much. Kama ni cash flow, mimi nafurahi sana, nitapata marks mingi bila kujua cha yanafanya. So tuko na year 1, year 2, year nimepata mark yote hii. Haya, year 1, year 2. So cash flow si ni mambo na profit tu. Si cash flow ni mambo na profit tu. So naanza hapa na sales. Si ni profit statement. Yes, that's to profit statement. So are you able to see, ladies and gentlemen, sales year 1 aki ni 200. Year 2 sales ni ngapi? Ni 280. 280. Year 3 sales ni ngapi? 320. 320. Na kutoka hapo sasa unakuja una subtract expenses C. So are you able to see the expenses? Are you able to see the expenses, ladies and gentlemen, expenses? Are you able to see the expenses? Somebody, are you able to see the expenses? So expenses umekuambia pale kuna 120, kuna 120, kuna 160, kuna 180. Una subtract ye. Utakuja sasa hapo useme capital allowance. Sisi katika financial management atumiangi jina capital allowance. Sisi ni washamba. Hiyo capital allowance ni wanafunzi wale wamechanuka, wale wamesoma wa taxation advanced. Na unajuanga, sisi tunajua capital allowance ni depreciation. Capital allowance and depreciation. Usahau hiyo. So depreciation ni 20, 30, 40. 20, 30, 40. Hayo ni marks inaingia tu. Inaingia kama maji. Kutoka hapo tuko na interest. Tuko na interest huo ye. Interest tuko na interest ya 10. Wanasema 10 na. Wanasema 10. The worst mistake you can ever do in the morning ya exam ni uanze kusubtract cash to replace assets. Cash to replace assets hatuwezi tukaleta hapa. Cash to replace assets hatuwezi tukaleta cash to replace assets hapa. Hatuwezi fanya namna hiyo. Right. So if you're correct up to there, could you kindly give me the profit before tax? Very fast. Give me the profit before taxation. Betty ananiambia year 1 ni 50. How about year 2? 80, 90. Thank you very much. 80, 90. Ukishapata profit before tax, the next thing you need to come and do is to do what you're somebody you tax. So come on the tax. So let's tax C at 30%. Please, cash to replace assets never goes to the income statement. Cash to buy, when you buy assets, you don't take that particular element to the income statement. So tax at 30%. Aki amjanipatia figures juu kwa nini. Tax at 30%. Wanasema ni 15, 24, 27. 15, 24, 27. Thank you very much. You subtract very fast. Expected return of the market has been given down there. Wamekuambia return on the market portfolio 11%. Mutembei. Uko chini kabisa. 35, 56, 35, 56, 63. So this one, which name do we give to this? It is profit after tax. So having gotten profit after tax, what do you think will be the next thing to be done? What do you think will be the next thing to be done? What do you think will be the next thing to be done? Wanasema add back you guys are bright. Add back depreciation. Add back depreciation. Depreciation ni ngapi? Depreciation ndizo hizi hapa juu. Wewe ungesema capital allowance ingekunyorosha. Sisi ni washamba, hataki mambo mengi ya capital allowance. Nikiona capital allowance lazima nikuje hapa. Right. So nakuja na add. Thank you very much Annabelle alisumbuka sana jana. Hii inakuja 103. So hii tunaita namna gani somebody? Hii ni cash flow. It's called operational cash flow. So this is called operational cash flow. Si ni kweli? Operational cash flow. Sasa kuna kitu pale woye. Kuna ile kitu ya perpetuity. Nakumbuka perpetuity. Kuna kitu ya perpetuity, lazima ukuje ongeze mwaka moja hapa ya perpetuity. Ukisahau hiyo kitu ya perpetuity utanyoroshwa. Haya. Na examiner saa zingine anakuwa mbaya kunyorosha, anakuambia go back to the sender. Yes. Kabla hiyo, yes. Hii ni operational cash flow, isn't it? These operational cash flows tukizipata, na niandike hapa juu. Operational cash flow tuko na 55, tuko na ngapi? 86, tuko na 103. Tukishapata hizi cash flows, these cash flows sio zote zitaenda kwa shareholder. Kuna zile ambazo lazima zibaki kwa kampuni. Pesa lazima zibaki kwa kampuni. Zinaitwa capex. So we come here and less capex. Capex is capital expenditure. The asset replacement. So asset replacement wamesema ni 25. What here somebody? 25, wakasema ni 30, wakasema ni 35. Asset replacement namna hiyo. Nipatini figures. Less capex. Thank you Koki. So less capex. Nipatini hizi figures sasa. Hizi tunapata hapa tunaita free cash flow. So free cash flow, what do we have here somebody? So wanasema mwalimu hii ni 30. Hii wanasema ni ngapi somebody? 68. No. 56 56. Thank you very much. Ya mwisho ni 68. Thank you very much. So this figure is expected to grow in perpetuity. That 68 figure is expected to grow in perpetuity. So come and do a working for us ya perpetuity. Come and do a working for us ya perpetuity. So do a working for us ya perpetuity. So a working for us ya perpetuity. Mimi naijua sana. Nikisikia perpetuity, mimi nakumbuka provincial officer. PO. Usiandike kitu kwa mtihani. Hiyo ni yako tu kwa akili tu. So PO, is there anybody who can give us this PO formula? It is DO into 1 plus G. It's the district officer who has to grow in ranks. So DO into 1 plus G all over Kenya minus government. All over Kenya minus government. So EPO ni current market price per share. Hii ni current dividends per share. Hii ni growth rate, right? Hapa tuko na cost of equity hapa, lakini sio unajua vizuri katika farm valuation hapa hii ya kufunza tu. Katika farm valuation normally hapa watu tunatumia WACC. Katika farm valuation watu tunatumia WACC. So the current dividend ni ngapi? The current dividend, which is the free cash flow here, is this 68. So has this examiner given us the perpetual growth rate? Wamesema ni 4%. It's only Ellen who has seen the perpetual, the infinity growth rate. The Infinity growth rate, it's 0.04. Thank you very much. It's 4%. 0.04. How about the WACC? I've forgotten my WACC, but if my memory serves me well, it was 0.11. If my memory serves me well, it was 0.11. If my memory serves me well, it is 0.11. Is that okay? If my memory serves me well, it is. Thank you very much. Thank you very much. Now, ladies and gentlemen, hapa lazima ucheze kama wewe pole pole. Useme juu kwanza 68 times 1.04 uandike answer kando. Tena uende denominator useme 0.11 minus 0.04 uandike hapo kando. Alafu tupatie quotient. Utuambie inakuja ngapi perpetual cash flow. Perpetual cash flow, David Oteki anasema ilikuwa ni 14%. David Oteki anasema ilikuwa ni 14%. Is that true? Was it 14% WACC? Don't know. Nakumbuka 10.99. Nakumbuka 10.99. David hebu kumbuka vizuri. Nakumbuka 10.99, which is 11%. Should be about 11%. Thank you very much. Maimuna, KE. Hapa tumesema Maimuna atumii KE hapa kwa farm valuation. Remember our farm, ladies and gentlemen, has got what here? Our farm has got debt. So here we are using WACC. Is it PVIF or PVIFA? Is it PVIF or PVIFA? Hiyo ndarudia. So mnasema inakuja ngapi somebody? 10.10. 10.29. Thank you very much. Umeona? Right? 10.29. So the most important thing is for us to appreciate that this figure 68 will grow forever. 68 will grow forever. 68 will grow forever. So itakuwa ni 68 times, this is our current dividend, times, so we have here 1.004, you close, divided by 0.11 minus 0.04, minus 0.04, minus 0.04. So are we able to get this 10.29? Right? Now, after that, ladies and gentlemen, please come here and now give us, please come here and give us, please come here and give us, come here and give us, come here and give us the discounting factors. Give us the discounting factors using WACC, using 11%. 11%. Kwa hivyo ye, hapa nitakuja niseme 1.11 raised to minus 1, 1.11 raised to minus 2, 1.11 raised to minus 3. Hapa itakuwa 1.11 because hizi huwa zinajirudia. Here infinity, it borrows from its immediate predecessor. Right? So kumbuka formula tumetumia ni gani huyu? So tumetumia formula 1 plus r raised to negative n. Hiyo ndio formula tumetumia. So ananiambia ya kwanza inafaa kuwa 0.9009, right? Ya pili je? Asante Anyaki. Ya pili je? 0.8116, 0.8116. Ya tatu je? 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 0.7312, 0.7312. Alpha. How about this alpha? How about this alpha? Alpha. Infinity. Inafaa ikuwe 0.73 because we normally borrow like that. We drop. Thank you very much. Sasa kutoka hapo unakuja unaandika P present value. So present value you are taking this times this. Unipatia figure. This times this unipatia figure. This times this unipatia figure. Like that. Present value. Present value. Unipatia figure, pata potea, ya kwanza, itakuja ngapi 2 decimal places. For year 2 is wrong or something. Where are we getting clarity? Charity angalia. Si formula tunasema formula ya PVIF. Formula ya PVIF ni 1 plus r raised to negative n. And what are we using to discount here? We are using the WACC. WACC that we obtain the charity. Ambayo ilikuwa ni ngapi somebody? Right? Yes, 11%. Ambayo ni 11%. 11%. Ambayo ni 11%. 11%. Thank you very much. 11%. Thank you very much. So unakuja haraka haraka abracadabra. Abracadabra, what do we have here? Abracadabra, abracadabra. PVIF ni annuity? Hapana. PVIF haina annuity. Ikiwa annuity itakuwa ni PVIFA. PVIFA. These are irregular. Year one, I'm getting a different amount. Year two, different. They're irregular. So wananiambia ya kwanza nafaa kuwa 27. Ya pili nafaa kuwa 45. Ya tatu nafaa kuwa 49 or something. Ya mwisho nafaa kuwa 738. Could you kindly give me the total present value? Give me the total present value. Give me the total present. Una add hizo zote. So when do we use KE? Remember, I hope you guys watch this video ya cost of capital. Unakumbuka cost of capital video PO. When you're getting value of a share. 860.977, that is the value of the firm. Remember a topic here, advanced financing decision. Ukipata PO, price over an ordinary share. Tuko tunasema ni DO into 1 plus G all over Kenya minus G. You see, when you're getting price of an ordinary share, there is nothing like debt. So here you will use KE, the way it is given. But when you are valuing an organization, this organization has got both debt and equity. You can't use only one capital component. Like that. Now remember, ladies and gentlemen, such kind of a question, so many students will not get it right up to here. Actually, so long as you demonstrate some understanding, CASNEB is a nice examination body. So long as you demonstrate some understanding of these things here, you're able to project to us some cash flows. In most cases, we end up giving all the marks. In most cases, we end up getting all the marks. Great. Thank you very much. What time do we have? Hata sioni saa hapa. What time do we have? We have like 40 minutes. We have like 40 minutes, right? 40 minutes, 1 hour, which is very good for me. And then remember, immediately after this, I'll be sending you some 2 videos. Utakuwa unaangalia hizo videos paka saa ngapi? Paka saa 3. Paka ukienda kwa exam, unaziangalia tu hizo videos, unaziangalia namna hiyo. Sawa. Now, wengine wanafanyia exam mbali. 1 hour haiwezi make. Hata mimi sitaki kwenda 1 hour, kusema kweli, nataka tumalizane namna hii. Mimi nirudi kulala. Usingizi kutosha. Usingizi leo imekuwa shida. Think yesterday pia nilifunza sana mchana. Usingizi leo imekuwa hatari sana. Yuko mwanafunzi anauliza, what is bootstrapping? Yuko mwanafunzi anauliza mwalimu, what is bootstrapping? What's bootstrapping? So remember, bootstrapping, ladies and gentlemen, is all about what? Yes, when an acquisition is via what here? Is via debt. When an acquisition is via debt. When an acquisition is done via what here? Is done via debt. Ukinunua a company with a loan, I'm telling you, umejiingiza katika bootstrap. Yes, umejiingiza katika bootstrap. Ile bootstrap imekukaza, because you see business as you progress. This business, whether you like it or not, ladies and gentlemen, in this case here, will demand you give it more money. So you'll be really bootstrapped. Na wala wanafunzi wanasema hapo wamejua sana. Ukioa kwa deni, ulipe dowry ya 3 million, na umetoa, usikaifanya makosa kama hiyo. Umeenda kufanya harusi juu ya milioni ngapi? Usikaifanya makosa. Unaingia kwa marriage ukiwa bootstrapped. Hata kama uko na kazi mzuri. Hizi pesa, ladies and gentlemen, hizo pesa anza maisha Nairobi na nyumba yako ya kujenga na family. Mwanza family pole. Hata ukiniitia mimi harusi at the end of the day, mimi nitakuja nikule tu, lakini umepiga milioni 2-3 kwa harusi ya kazi gani? Enda kama mimi kwa AG na hiyo maneno umemaliza na hakuna tofauti yangu na yako. Right. right? Now, ladies and gentlemen, there is something that I would want you to really look at before I tell you something about Modigliani and Miller. Now, when we talk of options, if you realize kwa pilot paper, examiner alikuletea option gani? Alikuletea hizi normal options. Very good. Normal option, which is a very good indicator that this examiner this time round atakuletea real option. Atakuletea real option. So is the real option? Are you guys very good at real options? I would want to skip this thing. Are you guys very good? Are you guys very good? Are you guys very good with this real option? Can we skip it? Can we skip it? Can we skip it? Refresh. Can't miss a mark. That is what I like. I can't miss a mark. Refresh. So shida ni time. Then what we could do to fanya tu just one question ambao tunajua sisi wote. Real option. An option ambayo iko na net present value. Real option. Ame-emphasize sana kwa hiyo nini? Ame-emphasize sana kwa hiyo. Ni same na ile option nyingine. Ni same. May 2016 question number 1. Actually hata ya pilot ni hiyo real tu. May 2016 question number 1 boy. Question number 1 boy. May 2016 question number 1 boy. May 2016 question number 1 boy. Are we there? May 2016 question number 1 boy. May 2016 question number 1 boy. Are we there? Helicopter touch. Iko mwanafunzi anauliza, mbona klasi ya audit haikufanyika? Tumjibu aje mwanafunzi. Itafanyika. Tuko na audit kesho. Tuko na time leo usiku. Tuko na time again asubuhi kesho. Tutafanya audit sana. Sisi waachilia dakika mwisho mspanic. Ya, audit iko masaa mengi sana. Tutafanya audit masaa mengi sana. Paka utachoka nayo. Vile umeanza kuchoka na AFM. Moja tuwasaidie tu mnyama tumtoe kwa njia huyu mnyama anaitwa AFM. Yeah. So unakuja hapo wamekuambia Planet Limited is considering undertaking a 20-year project which requires an initial investment of 250 million, right? In a real estate partnership and whose present value of expected cash flow is 254 million. Planet Limited has the option to abandon the project anytime in the next 5 years for 150 million. The variance in the present value of the cash flow is 0.09 and the 5-year risk-free rate is 7%. So sijui kama tufanye hii swali ama tufanye hiyo ya pilot paper. Tufanye gani? Tufanye hii ama tufanye ya pilot? Tufanye hii ama tufanye ya pilot? Tufanye hii ni mrefu kidogo. Hii ni mrefu actually nimeuliza sababu nilikuwa nataka kuiepa. Hii ni mrefu kidogo shida ya pilot. Pilot ni call, hii ni put option. So they want us to give them the net present value of the project including the option to abandon the project. So in this case here, if it's a question of option, I have D1, I have D2, I have D3 uongo. I have value of a call, I have value of a put. What unaandika in caps. Okay. You have to love AFM, yes. So unakuja hapa D1. Is there anybody who can remember the formula ya D1? Yeah, very good. Sasawa. Tukuja hapa amesema mwalimu hata hii andika ND1 alafu ND2. Thank you very much. So D1, is there somebody who can remember the formula ya D1? D1 what tunasema na Naperian logarithm into physical education, the only paper that I loved in primary school. Physical education plus into bracket we have risk-free, and then we have the variance divided by 2, multiplied by t, divided by standard deviation, root t like that. Standard deviation, root t like that. So, of course, there are those of you who may not be able to grasp this formula very nicely. If you can't grasp this formula very nicely, what do? Unaandika Mwakenya. Unaandika Mwakenya, unaenda mahali kwa nguo yako unaandika kitu. Unaenda mahali kwa nguo yako unaandika kitu. Usikaifanya makosa kama hiyo. Utaenda upate cast name, imeka invigilator kama wa 10 hata uwezi za kuona, uwezi ona. Ndio ukiwa Mwakenya unapanic sana. Unapanic sana. Now, hii sikustue, hii inaitwa natural logarithm. Inaitwa natural logarithm, kitu ya maana ni kwamba iko kwa calculator. So kwa hivyo ukiambiwa natural log 5, hebu ni tafutie kwa calculator yako natural logarithm 5. 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 Iko kwa calculator yako imeandikwa in, kila mwanafunzi angalie, imeandikwa in kwa calculator. Ni 1.6 something like that. Kila mwanafunzi make sure ameangalia natural logarithm. Thank you very much. Ladies and gentlemen, from there, we know that this P stands for spot price. P stands for spot price. Spot price, which basically is the same as the present value of future cash flows. So the present value of future cash flows, are you able to see the present value of future cash flows? Are you able to see the present value of future cash flows in this question? Is there anybody who is able to see the present value of future cash flows? Wamesema 254. Umeona pale wamesema 250 million in a real estate partnership and whose present value of expected cash flows is 254. Thank you very much. Spot price, future cash flow discounted. So nasema ni 254. Thank you very much. E is the exercise price. Exercise price. So should we decide to exercise our abandonment option? If we abandon, how much will we earn? Exercise. What is the exercise price? Wanasema 250. Exercise price wanasema 250. Mimi nafikiri ni 150. Mimi nafikiri ni 150. Exercise price. Exercise price mimi nafikiri ni 150. Exercise price ni 150. Because if we abandon today, how much are we going to get? Umeambiwa huko chini, Planet Limited has the option to abandon the project anytime in the next 5 years for 150 million. Hiyo mnasema exercise price, najua kwa nini mnasema ni exercise price. Hiyo ni initial cost. In case this abandonment value was not given, then I would have fallen back to the initial cost given. But here, if I exercise, the amount I'm going to get is given is 150, like that, right? R stands for risk-free rate of return. Risk-free rate of return. Risk-free rate ni ngapi somebody? Risk-free rate ni ngapi somebody? Risk-free rate ni ngapi? Risk-free rate ni ngapi? 7%. Thank you very much. 0.07. Have they given me the variance? Have they given me the variance? The variance. Have they given me the variance? Have they given me the variance? In this question, have they given me the variance? Wanasema variance ni ngapi? 0.09. Once you give me the variance, the next thing automatically that I'll think about is the standard deviation. The next thing I'll think about is the standard deviation, which will be the square root of 0.09. The square root of 0.09. Square root of 0.09, ambayo inakuja ngapi? Ambayo inakuja 0.3. Ladies and gentlemen, tafadhali, hii swali sikutaka kuifanya sana, lakini sababu yenu, na maybe hata nyinyi mnaongozwa na Mungu. Leo Mungu anaongozanga watu. Ndio nimefanya kile niwestia time sana hii question hii. Msahau kunikumbusha niongee kuhusu blockchain. Blockchain, msahau kunikumbusha tafadhali niongee kuhusu blockchain. Blockchain, msahau kunikumbusha tafadhali niongee kuhusu blockchain. Sawa sawa. Time. So time hapa time to maturity. Time to maturity ni ngapi somebody? Time to maturity. Remember it is time of the option, isn't it? It's your time of the project. The project is a 20-year project. 20-year project. But the time for the option is 5 years. You're right. Thank you very much, Betty. You must be a very good student, Betty. So wamesema namna hii, ladies and gentlemen, wamesema hivi, volatility sio sawa na variance. Sio mambo na VV, at volatility ni sawa na volatility ni sawa na standard deviation. Ukisikia umepatia volatility, hiyo ni sawa na standard deviation. Volatility ni sawa na standard deviation. Volatility is on a standard what year? Deviation like that, 5 years. So then, ladies and gentlemen, could you kindly go ahead and plug in these figures? Plug them in. plug them in kwa furaha. Hata ukifanya exam hata ikiwa namna gani, remember there is always power in smiling. Always there is power in smiling. Hata kama hakuna kitu ya kusmile about, always smile. So divided by the exercise 150. Mimi nakwambia, hata nikwambie kitu funny. Ukienda kwa exam, there are always two phases you can decide to wear. Wewe uende kwa exam uanze kujifanya cha hizi. Unaona hii? Exam lazima ukwe hivi. You must brighten up. You must brighten up. Hii. This is your portion. This is not your portion. This is not your portion. Unakasirikia nani? After all, umefunzwa na one of the best teachers in the country, right? Ukilemewa, what do you think of other students wale wamesoma, for example, some places? Ni shida. Right? Ni shida. So always, this is your portion. Hii kitu ya kunja mdomo namna hii, si nikipata naye kwa exam center, umekunja mdomo namna hiyo na kupiga kofi kusema kweli. Nasema wewe si mwanafunzi wangu, I disown you. Right? Unakuja hapa, unasema risk free. Umeshanipatia risk free. Kuna mara kwa umenipatia 7. Yes, ndio hii 0.07. In Jesus name, so 0.07 plus this is variance. So the variance umenipatia hapa ni 0.09. So the variance must always be divided by 2 times t. T angapi oye times t angapi oye? T how many years? T 5 years. T 5 years. T 5 years. T 5 years. And then everything to be divided by standard deviation again. 0.3 times root of time, which is root of 5, like that. Root of 5, like that. Then, ladies and gentlemen, what do we have at the end of the day? What do we have at the end of the day? What do we have at the end of the day? What do we have at the end of the day? What do we have at the end of the day? So hapa lazima ucheze kama wewe pole pole kabisa. Kuja useme kwa calculator natural logarithm in 254 over 150 close plus open bracket 0.07 plus 0.09 divided by 2 close times 5. Alafu unasema equals. Whatever you get, please also do something for your denominator. And then you divide, and then you give me the final answer. Please come and give me the final answer. Please come and give me the final answer. What are we getting for our D1? 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 Somebody help me. Helicopter. Somebody help me. Helicopter. And then the other thing, so wananiambia ni 3.34. I don't know whether that figure is correct. Ngata have a feeling your figure ni uongo. Kila mtu amenipatia yake. I have a figure feeling here Dennis ndio ukweli 1.6423. 1.6423. Thank you very much. 1.6423. I don't know how many of us are able to get this 1.6423. Are we able to get this 1.6423? Are you able to get the 1.6423? Are we? Yes. Unaenda pole pole unapata numerator kando, denominator kando, alafu na divide. Sawa. Now from there, ladies and gentlemen, I'll come and give them D2. D2 formula ndio hii hapa. No. So D2 will be equal to what? D2 will be equal to D1 minus standard deviation root T. So D2 will be equal to D1 which is 1.6423 minus standard deviation. Standard deviation nimeshanipatia already ni 0.3. This one here. Root. Mimi nikikumbuka tu D2 na kumbuka primary diagonal. The figures that I have. I'll take the D1 figure minus this. This minus that. Like that. Hebu nipatie ni figure ya D2 ni ngapi? Figure ya D2 ni ngapi? Do you put shift before logarithm in calculator or use it directly? You see, Annabelle nategemea calculator yako. Calculator kama imeandikwa kwa button itself in. Kama imeandikwa in, you don't say shift. No. Unafinya direct. Lakini hapa juu kama imeandikwa na ile color ya mkamba. Yellow. We shall overcome. Mwalimu anakubalika kuongea maneno. Kama imeandikwa na yellow, hiyo ni color ya shift. Hiyo ni color ya shift namna hiyo. Sasa wewe calculator yako imeandikwa aje? Si imeandikwa in kwa button juu. You don't use a shift. You can't use shift. You can't use shift. Na usiandike kando kando. Unasema tu ln into bracket 254 over 150 close plus open bracket 0.07 plus 0.09 divided by 2. Don't say equals anywhere. Close times 5. Alafu useme equals mwisho. Useme equals mwisho. And then unakuja unasema tena kando 0.3 times root 5. Unaandika kando. Alafu una divide. Okay, so wanafunzi wanasema mwalimu hii ni 0.9715. 9715. Now from there, ladies and gentlemen, we go to the next step. The next step ni gani woye? The next step ni ile normalization. Ile ugali ya Mluya. Normalization. Lazima tukubali kila kabila iko na strength yake. Hakuna mtu anaweza pika ugali kama ya Mluya, hakuna. So normalization, unakuja hapo unasema ND1, ND2, ND1, ND2. Aya. Kwa hivyo sasa nataka mnisikize vizuri sana. You see the figure that we have here, for example, ya D1 ni positive. D1 ni positive. Kwa hivyo nitakuja niseme 0.5 plus entry. Plus the entry of what here somebody? Entry of 1.64. You need D1. So I'll take 0.5. 0.5 plus the entry of 1.64. Lazima ikuwe 2 decimal places kwa normalization. Hii 0.5 nimetoa wapi? Wewe umesahau sasa aje. Tulisema aje ugali ya Mluya ni very proportional. Wewe pata Mluya amepiga ugali ambayo sio proportional. Right? So inakuwa 0.5 exact. Lazima uanze na 0.5 like that. Always ugali ya Mluya inakuwa very proportional. Iko vizuri. Tena kuna inanukia harufu mzuri kabisa like that. Haya, iko wengine mimi najua si kwa kupenda badala ugali anapikanga uji, lakini yote ni chakula tunakula tu. So ya pili itakuwa 0.5 plus the entry of what here somebody for ND2, for D2 tuko nayo entry of 0.97, entry of 0.97 like that. Right? Sasawa. Aya, kama for example hapa ingekuwa minus, kama D1 ingekuwa minus, ungesema 0.5 minus the entry, isn't it? 0.5 minus the entry. Aya, karibu tumalize. Hatuko mbali by the way. Karibu sana tumalize. Sasa hebu enda kwa normal table zako. Unisome entry of 1.64. Enda kwa normal table yako ya Z. Do. Tafuta 1.6. Hapo utafute column ya 4. Soma hapa katikati. Alafu unajua exam is all about keep the wheel rolling. Kwa mfano umeenda kwa exam hata hauna table, hauna calculator, hauna chochote, unasema hapa I have assumed entry of 1.64 is 0.8. Tunapendanga sana kama examiners kuona vitu kama hizo, where you make assumptions for the purpose of ensuring that your wheel rolls. Right? Una assume like that. Tunapenda sababu tutakuja tuseme method 3, tuandikanga hivi method 3, answer is the only one you will miss 1 mark. Answer 0. Watu tunapenda sana namna hiyo. Ya hata in case of time, yes. Haya, lakini wewe ushajua kusoma EZ 1.6 na E4 hapo unasoma 0. ngapi hapa somebody? 0.4495. 4495, thank you very much. 4495, thank you very much. Kwa hivyo oye ND1 itakuja kuwa 0.5 plus 0.4495 like that. Nipatieni figure jameni. Nipatieni figure kwanza ya hii, hata usinipatie. Najua ni 0.9495. Thank you very much. How about entry of 0.97, second entry? Already mwanafunzi shapata. Second entry ningekuwa nimeshapata tayari. Si tuko na Z pale. Mimi nataka kuacha swali niende kuacha, nataka kufanya. Ndio mnanipatia maswali ambayo mimi sitaki kufanya. 0.97 hapa 0.9 hapa 7. Alafu nasoma Z score normal. So nasema ni 0.3344. Kwa hivyo nitakuja hapa niseme ND2 itakuwa E.5 plus entry umesema ni 0.3340. Thank you very much. Kwa hivyo itakuwa 0.8340 like that. Thank you very much. Now, ladies and gentlemen, after getting value, after getting, in this case here, ND1 and ND2, the next one will be for you to come and give us value of a call. Give us value of a call. So VC, vice chance, is there anybody who can remind us the formula? Ya kupata value of a call. Is there anybody who can give us the formula? The formula ya kupata value of a call. Mimi napenda value of a call when we were being called in a high school, not high school, primary school. Ukisikia tu kengele imepigwa namna hii, kengele ya kuenda PE sio sawa na kengele ya kuenda kwa mathematics. Hii ya PE iko na raha fulani. Physical education. Physical education. So ukisikia calling, value of a call, unakumbuka physical education. Physical education. Physical education. Nimeona hapa mtu tunashare naye maneno. Nimeona mtu ambao tunashare naye maneno hapa. Wao tunasema ni physical education like that. Kama amesema pia kisikia ya lunch. Ilikuwa kengele mzuri sana. So physical, lakini unakuja unaongezea hapa ND1, hapo unaongezea ND2, and as if in this case here that's not enough, unakuja una divide this one by E raised to RT. E raised to RT. So ukisikia value of a call, you're being called to go for physical education. You're being called to go for physical education. You're being called to go for PE. Like, one of the stimuli misbehave. Mungu asaidie tumalize. Imefanya mara mbili hivyo. Haya, ishindo yes. I am equal stable sasa. Great. Tunakuja hapo tunasema hii kitu ya ERT. Hii kitu ni kanoma sana ka Euler's constant. Lakini ni mwanafunzi mwerevu, so long as uko na calculator, ufai kupanic. Hebu kuja hapa sema e raised to 2, uniambie ni ngapi e raised to 2, uniambie ni ngapi e raised to 2, uniambie e raised to 2 ni ngapi. Tunako utapata e raised to 2. E raised to 2. E raised to 2 ni ngapi? Wanasema ni 7.38. Wanasema ni 7.38. 7.38. Is that okay? Haya, kuja kwa hii yetu hapa je, e raised to r huko nimeambia 0.07 na time ukaniambia ni 5. Kwa hivyo itakuwa ni e raised to 0. What somebody. Itakuwa ni e raised to 0. What somebody. E raised to 0. What somebody here. E raised to 0. What somebody here. E raised to 0. E raised to 0. Ukimultiply hii na hii. Ukimultiply hii na hii itakuja 0.35. Thank you very much. Haya, wanasema tunafanya e. Hebu kumbusha, angalia e. Si hapo uko na hii button imeandikwa ln. Juu yake imeandikwa e raised to x. Right? So kumaanisha ukitaka kutumia e lazima useme shift. Shift this one. Alafu unaona e kametokelezea namna kana kuangalia hivi. Aka e kakitokezea namna hiyo, ukiraise again utapata syntax error. Don't raise again. So unasema e2. Unasema e2. So Caroline, ukisema e2, are you able to get now this figure Caroline? Ukisema e2. Najua Caro umesaidia wengi, ni vile huwezi jua. Ni vile huwezi jua. Umesaidia wengi. Sasa using, ladies and gentlemen, the same idea, could you kindly give me e raised to 0.35? E raised to 0.35. E raised to 0.35. What's raising? E raised to, umeniambia inakuja 1.4191. 1.4191 like that. Ladies and gentlemen, after you do that, then the next thing now you'll do is to come and give us value of a call option. So value of a call option, are you able to remember the spot price? Spot price will come in 250 what? Spot price will come in 254. ND1 nimeshavuta yangu. ND1 nikumbushe figure. ND1 nakuja ngapi? ND1 nakuja ngapi? ND1 94.95. 0.9495. Yes. Minus the exercise. Exercise level 150. How about ND2? ND2 ni ngapi? ND2 ni ngapi? ND2 ni ngapi? ND2 ni ngapi? 83.34. 83. Is it 34 ama 44? I don't know. 83 what? 83 what? 83 what? 83 what? 83 what? 83 what? 44, thank you very much. 44 upper divided by this E, which is 1.4191. 1.4191. Ambayo inakuja na kuwa ngapi? wanasema the final answer inafaa kuwa 153.02. Thank you very much. The final answer. How comes it's only one student who is getting this correct? How comes it's only one student who is getting this correctly? How comes it's only one student who is getting this correctly? 153.02. Gertrude, thank you very much. Thank you very much. Thank you very much. Now remember, this is value. This is an option to abandon. So if it's option to abandon, then you must come and give us value of a put option. Go straight away, give us value of a put option. You know, the last step, give us the value of the put option. Wakisema value of the put option, wakisema value of the put option, value of the put option. Lazima kwanza ukumbuke value of the call. So value of the call, what do we have? Value of the call, tumesema value of the call is physical education. Kwa hivyo itakuwa PND1 minus END2, right? All over E raised to RT like that. Lakini unaposema sasa value of a put, kwa tunaanza na E. Value of a call, alafu na transfer hizi the other side. So itakuwa ni minus PND1, hii inakuwa ni plus. So inakuwa plus E ND2 E raised to RT. But now you must remember something here. You must remember something here. Ladies and gentlemen, for put option, we don't use probabilities. For put option, you don't use so delete this and that. And then remember that this is spot. This is spot. So for put option, we don't use probabilities. Right? Right? So tuende hapa, value of a call. Value of a call. Value of a call. Value of a call ilikuwa ngapi somebody? 153. Value of a call ilikuwa ni ngapi somebody? Value of a call ilikuwa ni 153.02. Thank you very much. Aya, spot umeniambia ni 254. Spot umeniambia ni 254. Plus exercise. Exercise uliniambia ni 150. Hiki ki E raised to RT nimekisahau. 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 1.4191. 1.4191. So then at the end of the day, what figures are we going to get? Hata si lazima tuende kwa interpretation. Ukishafika hapo, hata tafuta kizungu ya kumwambia, hata usiende hata kwa mambo mengi sana. Fika hapa tukisema because the option is positive, then I will be able to blah 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 like that. Blah 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 like that. Aya 4.72. Hiyo kwangu mimi imenitosha. Hiyo kwangu imenitosha. Have you been able to pick something out of this? Have you been able to pick something out of this? Have you been able to pick something out of this? Have you been able to pick something out of this? Have you been able to pick something out of this? Yeah. So usikasahau formula na utapewa haya. So D1, nakumbuka D1 is LN, alafu nakumbuka bell ya mwalimu, physical education, right? Unakuja unasema hapa plus R, and then we have here T, all over what here, somebody standard deviation, square root what there, square root T like that. So that is very, very important. Now, ladies and gentlemen, from there now I'm being reminded the concept of blockchain. Can somebody in this case here describe for us the blockchain technology? Wenda kwa Google, what is blockchain technology? What's blockchain technology? What is blockchain technology? What's blockchain technology? What's blockchain technology? What is blockchain technology? Remember, blockchain is not the same as cryptocurrency, no. It's a general ledger. It's a real-time general ledger. Real-time general ledger. General ledger. General ledger. Yani, ukifanya, for example, like now, cryptocurrency is one of those particular assets, which in this case here uses the blockchain technology. Yeah. Which uses currency uses this general technology called the blockchain. So when, for example, somebody makes a payment kawaida kwa general ledger automatically, that's why we are calling it real time, right? already blockchain is really being used, for example, even by these banks. Kitambo bank, watu walikuwa nakimbia, mimi nasikia unakimbia, for example, kama ni kwa wherever unatoa kitu mara moja, unaenda kwa ATM unapata hawaja reflect, unatoa tena pesa kwa ATM. No, nowadays it is real time everything. In this case here, stored at the cloud like that. Now then, could you kindly give me advantages of this general ledger called blockchain? Blockchain, what are the major advantages? What are the major advantages of the blockchain? What are the major advantages of blockchain? So kama umetuambia blockchain is defined as a ledger of decentralized data that is securely shared. Blockchain technology enables a collective group of select participants to share data. Data is broken up into shared blocks that are chained together with unique identifiers in the name of cryptographic hashes. So hapo tutakuwa na kitu ya hashtag. So you're saying in this case, ladies and gentlemen, that these ledgers are stored in some blocks. And these blocks are so much related. They are so much related. For example, kama ni mwalimu Aura ako na transaction na Jenny, maybe wanauzania mashamba namna hiyo. So Jenny atakuwa na block yake, mimi nitakuwa na block yangu. Hizi blocks in this case ziko na hashtags, unique identifiers. Hawezi uka alter these unique identifiers. So once in this case, ladies and gentlemen, I'm able to transact, nasema nimeuza from my ledger natolewa inayo kwa ledger ya Jenny namna hiyo, right? And then the other thing, ladies and gentlemen, that you're supposed to know is that these blocks, anybody who is within this chain, for example, kuna Ministry of Lands mahali hapa, who is also like a customer, is taken like a customer. They are able to see all these transactions. Every other person who is here, huwezi iba kitu ya mtu. This is technology of the future. Technology of the future, right? Right? So in this case here, then what are the already tumesha sema advantages mingi sana. Advantages of this: security. Yeah, security. We have the concept of transparency. Yes, transparency. I love that. Traceability. And that is why you realize that most of these countries that have really developed, kitu kama their lands iko na crypto, iko na hiyo blockchain. Hapa Kenya tunafanya zile land ledger tunaweka tu computer ya kawaida, inafaa kuwe blockchain. Kitu kifanyika namna hii, kama ni approval ya building fulani, ikifanywa kwa city council, everybody anasema kuna shamba fulani imekuwa approved jengo mall. Has NEMA in this case given as a license, everybody is able to see what is happening around just by a touch of what here, some button like that. Yeah, great. Tauzia shamba. Yes. Ladies and gentlemen, that is very important to me. Then what is cryptocurrency? What is cryptocurrency? Cryptocurrency is one of those particular assets in this case that can only work in this blockchain technology. What is cryptocurrency? Ladies and gentlemen, don't forget that on the 18th, we are starting, ladies and gentlemen, we are starting straight away on this course called Excel. So many of us have to do advantage of Excel. Excel is a very important course for actually any accountant who does not know Excel is not an accountant. So Excel is very important. We're starting it on the 18th up to the 23rd. Tunakuwa nasoma 7 p.m. It's advanced Excel, pivot tables, etc. I'll be teaching it myself. So it's important we register. Unalipa 2,000 alone, and please, this is the number. Don't forget this. Hata kama exam yako inakuangalia, don't forget that. That's very important. Yeah, Excel. Don't forget that. Very important. So umesema cryptocurrencies are digital assets. Right? Remember blockchain for digital currency, the blocks are your digital wallets. Within the digital wallets, then you have your digital currencies. Yes, digital currencies, I love that. They are intangible tokens which are recorded using blockchain technology. Intangible tokens. Ladies and gentlemen, remember at the end of the day, this blockchain technology, cryptocurrency, they are basically after what here, at the end of the day, would want things in this case here, actually this is another advantage of this thing, would want in this case here, things that are what are decentralized. centralization normally is characterized with what? A lot of corruption. So the one thing in this case here, everybody, hata ukiwa mashinani wapi, blockchain will be able to enable you get all the data that you need, right? So crypto operates in this particular concept here. Now, could you kindly give me the examples of cryptocurrencies that you know? Cryptocurrencies that you know. Cryptocurrencies that you know. Cryptocurrencies that you guys know. Ni kama gani cryptocurrencies? The cryptocurrencies that you know. Ya kama Bitcoin, Ethereum, Bitcoin. Apart from Bitcoin and Ethereum, hakuna kingine mnajua? Solana, kama mnajua sana. Hata Doge, yes. Mnajua sana. What are the major disadvantages? What are the major disadvantages of these cryptocurrencies? 2 disadvantages. Like Litecoin, yes, is also coming up. What are the major disadvantages of these cryptocurrencies? Unregulated, yes, I love that. Yeah. Of course, in this case here nowadays, they have become very costly. Also, the concept of what here fluctuation, they fluctuate quite a lot. Right? Inataka somebody who is very stable. Yeah, Ellen anakaa kujua sana. Yes. Ikitu, the blockchains, ladies and gentlemen, normally need a lot of what here? Energy to mine the coins. I don't know whether this thing is truthful, but ukianza kuona CPA imeleta kwa exam, imeweka kwa syllabus, ACCA pia imeweka kwa syllabus, na maanisha crypto lazima tununue. Right? Na sasa imekuwa very expensive. Like one Bitcoin is going for over 6 million. Totoa wapi hiyo pesa jameni? Lakini tuko na wanafunzi watanichangia. Very good. Now, ladies and gentlemen, that is it. And please don't forget what we call crowdfunding. Are you able to remember the crowdfunding? What is crowd? I don't know why Kasneb decided to shrub. I don't know, cloud. It's not a cloud. No, it's crowd, like this. Crowdfunding. What is crowdfunding? Abdi raising money from a group online, right? Remember out there, ladies and gentlemen, there are so many people who are so good, who are simply willing to give you what here, who are willing to give you money. The only thing you need to do is to give a very good story of your project. And once you provide a very good story of your project, then so many people will be able to basically fundraise for you. So crowd means what here? A big population. Why a big population? Because of the risk involved, people will not be willing to give you a lot of money. People to contribute like a dollar, in this case here towards some venture, right? And there are platforms. There are very many platforms which are available. Are you able to list those platforms? Yeah, kama Chep amesema GoFund, ama GoMeFund, right? Crowdfunding is a practice of funding a project or venture by raising small amounts of money from a large number of people in modern times, typically via the internet. I love that. Caroline seems to be a good researcher. She's able to pull this information very fast, which is very good. So crowdfunding, na already nimeshakupatia paka platform, ngawa ile mnajua ni moja tu platform ya crowdfunding, mnajua ni moja tu. Amjui mingi crowdfunding platform, amjui mingi. Crowdfunding amjui mingi. Okay. Great. The donation base is normally very big. Very big. Now, ladies and gentlemen, in your pilot paper, are there theories that you are not able to do? Rates, I raised this concept of rates yesterday, remember. Rates, at least tuliongelea kuhusu rates jana, kidogo namna hii. Hiyo pia uwezi ukakosa sharp trainer. Kabla niongea kuhusu sharp trainer and rates na MM2 whatever, hebu tuangalie hii concept ya pilot paper theory. Kama jana jana walituletea theory moja nzuri sana ya 4 marks ya AFR from the pilot. Are there theories that you guys were not able to do? Are there theories you are not able to do? Are there theories you are not able to do? Are there theories you are not able to do? Are there theories you are not able to do? Are there theories you are not able to do? Kwa ya jana. Are there theories you are not able to do? Are there theories they were not able to do? Wacha nitafuta haraka haraka. CPA, advanced financial management. Time is not on our side. Time is not on our side. Kabisa kabisa. So advanced. Akia waongei. Kama kuna mwenye amesema leadership yangu sioni kwa nini advanced. Kwa nini sioni kitu sasa? Great. Umeona kama pala amekuuliza explain 4 advantages of investing in real estate investment trusts. What are the 4 advantages of the rates? 4 advantages of the rates. Why should we invest in the rates? Why should we invest in the rates? Why should we not be thinking of just company shares, no more? Weekly for amesema tax savings. That is very true. You'll end up saving a lot of taxes. That is number 1. Gani ingine tena? Haraka nipatie hizo points haraka. Aki hazikuji. Diversification is just like any other business. You'd want to diversify. Yes, diversification. Thank you very much. Right? Yes, we are also going into this because of the returns. And to be specific, normally isipokuwa corona imeharibu sana, returns za mashamba namna hii zinakuwa very high returns, high dividends. Thank you very much. High dividends. Yes, liquidity. Remember, this is not land. Rates are shares of companies. Rates are shares of companies which are in property business. So these shares kumbuka ni kidogo eh? Yeah, kidogo kama shilingi 10. So it's easy for you to sell. They are quite liquid. You can easily go and sell. Yeah, you can provide this as securities for borrowing. But remember the key word there is that they have told you to explain. So that is it. The next one, ladies and gentlemen, there, wanatuuliza, explain the meaning of the term cryptocurrency and give an example. Hiyo mtasema haraka. Wanakuuliza, in relation to financial risk management, briefly explain 4 advantages of financial derivatives. Yes, Kevin, I've already noted your point there. But now let us shift gear. Let's shift gear. So in this case here, what are the major advantages of financial derivatives? What are the advantages of financial derivatives? Remember, financial derivatives will help you to manage your risk. And as you manage your risk, you can also do business out of your derivatives. You can do business out of it. You can go and sell, right? Very good. Brother here tells us, Felicitas, that in this case here, these are tools of risk minimization. Thank you very much. So you are able, in this case here, to hedge risks using them. You are able to hedge what here? Hedge risk. That's a big advantage. Yes, ladies and gentlemen, when you go to the derivatives way, you'll be able to reduce on taxes. The expenses involved in this are tax allowable. Thank you very much, Irene. It is one of the surest ways of tapping onto international markets. One of the surest ways of tapping onto international markets, even for purpose of fundraising. Yeah, you can go and sell options. For example, in Tokyo, options exchange. Right? Please give me these advantages very fast. Advantages of derivatives. Advantages of derivatives, yes. Because of the organized thing, it will improve market efficiencies. Market efficiencies. So basically, these are tools which are basically being used as what here? Intermediaries. They are financial intermediation tools, where we are able to get money from people who have got excess and give the same money to who? People in this case here with no cash, but many ideas, right? So for speculation purposes and making profits, yes, that will be able to give you a mark. Right? Ladies and gentlemen, please, the next one there, we're going to discuss C4, E-concept here, unbundling, management buyout, management buy-in, spin-off or demerger, sell or divestment. We're going to discuss. Here, right? How about advantages of simulation? Advantages of simulation analysis. Simulation, of course, the disadvantages, the biggest one, the concept of what here? Uncertainty. Simulation, of course, has probability, so they're quite uncertain. Very hard for us to predict. The future could be very different. Right? How about advantages of simulation? Somebody can even Google there. Advantages of simulation. Ukiulizwa disadvantage kama hujui sana, ladies and gentlemen, there are things you'll always think about. Unafikiria, for example, like you need some high level technical skills to be able to simulate. Right? To be able to simulate, you need that. The model also may need computers. It's an expensive model. How about advantages? Advantages, simplicity, I doubt. These things are not for a commoner. They're not for a commoner. Advantages of simulation. Nangoja mniambie, hiyo msiponiambia sasa tutawache kitu. Advantages of simulation. So nitakutumia video ya nitakutumia na video nyingine namna hii. Yep, this simulation is a decision making tool. I love that. It's a decision making tool. Very good, Gaki. It helps study behavior, trends, movements. Right? Helps study behavior, the trends, stroke movements. We are able. Ladies and gentlemen, simulation also helps entrepreneurs to understand their business. Helps entrepreneurs to understand their business. When you're trying to simulate like that, utajua your business sana sana. Now, is there any other theory paper, any other theory question there? Any other theory there? This question 1 lisumbua wanafunzi sana. Question 1. Do we have time for question number 1? Question number 1 lisumbua wanafunzi sana. Question number 1. GLD Building Group is contemplating a takeover of the Arim Enterprises Limited, a manufacturer of earth-moving equipment. The following information is available about the two companies. They have given us GLD, they have given us DRM there. So you can see the dividend per share for GLD is 0.3, DRM is 0.09. We have price per, pale, ile price per share. It's price per share, not price per price. The cost of equity for both firms is 10%. Wamesema from a level of 0.06 per share 6 years ago, ili inafaa kuwa DRIM, not GLD. Inafaa kuwa DRIM, dividends has grown to the current level of 0.09. You can see DRIM, dividend current is 0.09 per share. GLD's management is confident and managerial synergies arising as a result of proposed takeover will enable them to increase DRIM's Limited's past dividends growth rate by a further 1%. The merger will involve transactions costing 500,000. So they want us to, based on approximate dividend growth rate, estimate the post-acquisition value of DRIM's Limited using the dividend growth model and evaluate the value gain arising as a result of what year? The takeover. Here they are quite low-hanging fruits that I'll be able to get very fast. The first thing they have mentioned there is dividend growth rate. Dividend growth rate ni kitu ya PO. So our PO will always be equal to district officer who has to grow in ranks all over Kenya minus who? Government. All over Kenya minus government. So I want to get value of a share. So ladies and gentlemen, in this case here, DO. Kwanza ngoja kidogo hapo lazima tupate growth rate. Because hatuna growth rate. So growth rate, I hope you guys are able to remember the formula. N-1 into, in this case here, current dividend over oldest dividend minus 1. Now remember kumepatiwa 2015, 2016, 2017. Our N in this case here will be how many years? Our N will be 3 years, right? So N-1 will be 3 minus 1, giving us what here? 2 years, right? But you see, what is this 2 years to us? It is a difference between like end of 2015 and the end of 2017, 2 years like that, right? But you see, in our case, they spoke of 6 years ago. 6 years ago, ukiambua 6 years ago, inamaanisha N-1 is 6. Inamaanisha N-1 is 6. Hapa ndio wanafunzi wanaweza kukosea sana. Kwa sababu nakwambia ukihesabu ni 6 years ago, sika tuko pamoja na nyinyi kweli. 6 years ago, shake 5 hapo wewe. 6 years. If you count backwards, it is 6 years ago. So in this case here, N-1 is 6. Now, ladies and gentlemen, if that is the case, could you kindly go ahead and give us, so this will be 6 into, what is the current dividend being spoken about? In this particular note number 2, note number 2, it is 0. What here? Is it 0.9 number 0.09? It is 0.09 is the most current. All over the oldest, which is 0.06. Whatever we shall get there, we shall subtract 1. So kwanza unaendanga kwa hii 0.09 divided by 0.06 ni ngapi? 0.09 divided by 0.06 ni ngapi? Somebody divide for me. 0.09 divided by 0.06 ni ngapi? 1.5. So could you kindly give me the 6th root of 1.5? What is the 6th root? Enda kwa calculator yako. Enda kwa calculator yako jameni, uangalie kitu imeandikwa x root. Alafu useme 6th root of this 1.5. Useme 6 kwanza shift 1 point. Inakuja ngapi somebody? Wanasema ni 1.067 minus 1. So your growth rate inakuwa ngapi? Minus 1. I don't know whether all of us were able to get this 1.067. All of us, and sure you are able to get this 1.067 minus 1. So nasema itakuja 0.067, which is the same as 7%. After you get this 7%, please add the synergy. Add the synergy extra. The synergy extra, because they are coming together. Kuna synergy extra ya what percentage? Ya 1%. Kuna synergy extra ya 1%. Kuna synergy extra ya 1%. kuna synergy extra ya 1%. Synergy extra ya 1%. Umeona kule mali wamesema synergy extra ya 1%. Zikija pamoja, umeona synergy extra ya 1%. Aki hujaona wakisema 1%. Yes, unaona mali wamesema there is a further 1%. Umeona mali kuna further 1% not 3. Kwa hivyo inamaanisha kwamba our growth rate itakuja ikuwe ngapi somebody? Our growth rate itakuja ikuwe ngapi somebody? Itakuja ikuwe 8%. Growth rate itakuja ikuwe 8%. Hii usiwache Becky, hii ni rahisi sana. Hii usiwache hii. Hii ni rahisi sana Becky. Ubata mjakunywa, mmekunywa chai kweli? Haya, turudi tena mwanzo. Tunasema PO equals who? Equals DO into 1 plus G all over Kenya minus government. So could you kindly give me the most current dividend ni ngapi sasa? Most current dividend ni ngapi? 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 0.09. Wala mjakunywa chai na mko Nairobi town, mkipita nitapatia Java kale ka cup natembea nako mpaka kwa exam room. Cup mzuri sana ya Java. Ya, na snack mzuri sana. So growth rate umesema ni 0.08. Now, has this examiner given me the cost of equity for this firm? Cost of equity for this firm ni ngapi? Cost of equity for this firm ni ngapi? Cost of equity for this firm ni ngapi? Wamesema ni 10%. Kwa hivyo itakuwa 0.1 minus 0.0. Hebu tuende abracadabra haraka hapa, nipatie PO. Abracadabra, tuende haraka. And then the videos I will send to you ni high level PO. Usually moja inaweza kuwa 1 hour. Unaangalia kwa gari ama wherever unaenda, high level juju. Ukisema peleka mbele inakuja 4.86. 4.86. Thank you very much. 4.86. So therefore, what is the value of this firm? Value, the new value wewe inakuja ngapi? Kumbuka new value nitachukua hii 4.86 times nose. Thank you very much Mesh, times nose. So itakuwa 4.86 times nose. Kwa hivyo itakuwa 4.86 times the nose. Number of ordinary shares ni ngapi? Hii company which is being acquired. Company which is being acquired ni 4 million. So we have here 4 million. Ambayo itakuja ikuwe ngapi? 4.86 times 4 million. 4.86 times 4 million inakuja inakuwa ngapi? New value inakuja inakuwa ngapi sasa? Oye. New value inakuwa 1944, the year that I was born. 1944. I was born many years, many periods. 1944, something like that. 19.44 million. 19.44 million, like that. Thank you very much. What was the old value? The old value of that firm which is being acquired. Old value, what was the old market price per share? Is there anybody who is able to see the old? Where Karume nipatia dividend, imagine. Karume nipatia dividend. Inafaa kuwa 3.2 times his number of shares about 4 million. Hebu nipatie namna hiyo niambie. 3.2 million. 3.2 times 4 million. Inakuja ngapi? Inakuja 12.8. So hebu subtract haraka woye. Subtract haraka woye. Ukuja hapo nipatie, in this case here, the benefit which is the increase. 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 6.64 million. 6.64 million. Kumbuka kulikuwa na cost involved. Kulikuwa na cost involved. Was it 500 or something? Kuna cost involved hapo. So unapata the net gain. Kuna cost involved hapo. Unapata the net gain. Unapata the net gain. Like that. Now, so I'll send you a video ya Modigliani Miller. Right? Pia kuna mali nataka ujaribu kuangalia kidogo nitakutumia video saa hizi. Ladies and gentlemen, kilicho na mwanzo kina mwisho. I want to take this opportunity to thank you so much, especially those students who took big leap of faith to join online classes. Online classes ndio the way to go. Online classes is the way to go. Wale wanafunzi ambao walikuwa physical classes, hata next semester tafadhali muingie hii. So asanteni sana. Please, confidence is key. Ukienda ukipata swali ya uelewi sana, kuna price hapa, kuna probability. What should you do? Multiply them. Multiply them. So we need to keep on talking, ladies and gentlemen. We need to keep on talking. My personal number is here. Lakini sana ukipiga simu nafunza. unakasirika kama ule Anna alikasirika jana sana, usikasirike. Maisha usikasirike. Maisha usikasirike. Hii ndio namba yangu personal. Hii ndio namba yangu personal. Please let's keep on talking. Kama unipati kuna ya shule pia. Unanisisi tunasema I have to talk to that teacher. Hii ni ya shule namna hiyo. Let's keep on talking. Please remember, if every other thing fails, always God is there for everybody. So it's important ukienda kwa exam unafanya maombi, lakini hapana kuwa na wasiwasi at all. Hapana kuwa na wasiwasi at all. Utashangaa sana unapita. Mimi kuna vitu ambavyo zinisaidianga sana kwa hizo exam. Kufanya maombi ni very important. Na huyu Muislamu akapo atakwambia zaka. Mkristo ile kutithe. Na tithe for the exam. Na kutolea mapepo mbaya. Alafu unajua, ladies and gentlemen, usishinde kwa swali moja sana. Ushinde kwa swali moja. Ukiona swali ni mzuri sana, unafanya unaachana nayo. So thank you very much. All the best. Please, blessings zikufuata kibao. Zikufuata kibao. Later on I'll be able to do a seminar ya ku-advise about job. But for now, that's okay. Just think about your exam. Bye-bye. Thank you very much. I love you so much as my students. Bye-bye.